Okay, well, welcome back from the lunch break. Hope everyone had a chance to go and meet with our sponsors in the networking area, as well as catch up with colleagues as well. Up next, 2 sessions, we have the panel on the future of digital lending with speakers from 86400, TicToc and Nano. As you can say, definitely the future of digital lending there. Following that, we have Sarah Megginson from finder.com.au, who will be talking to us about maximising brand value through education. And I'll see you after that. Thank you.
Hello everyone and welcome to AIMS 2021. Today's panel looks at the future of digital lending, and I've got a great bunch of panelists with me today, including Melissa Christy from 86400, Anthony Baum from TicToc, and Andrew Walker from Nano. Now, to kick off the discussion, I just thought I'd give you each to introduce yourselves. Anthony, should I kick off with you, just a little bit about yourself and the business?
Yeah, sure. I'm Anthony Baum. I'm the founder and CEO of TicToc. We launched in 2017. Today, we are a home loan business with a portfolio rapidly approaching $1.5 billion. And basically, we estimate that we have about 4 to 5% of the digital end-to-end marketplace today. We grew in the last calendar year 128% year on year in settlements, which is about 4 times the growth in the digital channel, which grew at about 33% and is the fastest growing segment of the market. We also sell our technology to the industry, and we have our first platform as a service partner in Bendigo and Adelaide Bank, but we also have a second platform as a service partner that's about to launch, along with many customers now using our first module of our platform in Validate.
Okay, great. And Melissa?
Yep, Melissa Christy from 86400. I run the lending business at 86400 and have done so for 3 years. So was involved in designing, developing and launching the mortgage business from scratch. We launched in November 2019 and we are a broker-only business at the moment. And we have a number of large aggregators on board to assist us with our applications.
And Andrew, you've recently rebranded as well. So just wanted to get a little intro from you.
Yeah, okay. So Andrew Walker, I'm the co-founder and CEO of Nano Home Loans. We used to be called Verteba Home Loans, which was a name that no one really understood, including myself. That was a name we had while we were developing Dark. We're a digital home lending business. We're in the friends and family phase of our launch now. Public launch is going to be in April. And we use data, digital and design and real-time decisioning to improve the home loan process. And we believe that the home loan process is not just real-time decisioning and digital application, but also real payments functionality and a digital experience that allows you to interact with your home loan after you're onboarded. That's our business.
Okay, great. Now, there's no doubt that digital lending, like yourselves here on the panel, have really reshaped the way banks are now approaching lending. And I mean, in 86400's case, the technology was so amazing, a bank bought it. I just want to kick off. I know that each of you have alluded slightly to in the introduction, but just a little insight into the particular technologies you harnessed that have really resonated with your borrowers. And I guess, Melissa, if you could kick off.
Yeah, sure. I guess the key things for us is that we have the digital home loan for brokers. What we say is the first digital home loan for brokers. We have an electronic BOI process, electronic identity verification, we only collect income and expense data electronically, so we don't offer customers the opportunity to give statements or provide payslips. We obviously do the digital mortgage signing, and all our documents are signed digitally.
Okay, all right. And Anthony, your technologies was highlighted at, well, not recent, but previous forum on responsible lending along instantaneous verification. Just want to get your perspective. You know, was that a real advantage for you? Because certainly appealed to the people.
Christine, basically, you know, the attributes to better customer experiences, data, automation, and leveraging those two through enrichment, enrichment and rule automation. And we've done that holistically across the TicToc platform. So fastest time from dual applicants starting an application to having their fully approved loan documentation and verified, of course, documentation in their inbox is under an hour. And the human effort in that was about 10 minutes. So, you know, the goal, I think, of probably everyone on this call is for customers whom we're able to, because the data is sufficient and robust and their circumstances justify it, is there's no human intervention whatsoever. So they're the two basic building blocks. With respect to Xi Validate specifically, that is a module of our platform with which we deal with the aspects of financial verification and the financial position of the customer, and it is a competitive advantage for the TicToc home loan, but it was also a technology that the industry needed, and we very much believe that the best way to transform our industry so that it is able to offer better customer experiences, get the cost out that it needs, lend responsibly, be that from a legislation or other policy perspective, is actually to prove what is possible through that technology and then make it available to the industry. You know, and that's been our philosophy from day one, and that's why we've done what we've done. But it absolutely is core to our value proposition, that module, and you know, makes our process much easier for a consumer and much lower cost for us to fulfill for the customer.
And Andrew, I'm in a family phase of testing. What about your technologies? How's that been resonating with your group of investors through mobile phones?
Yeah, look, it's interesting on this panel, but we've all seen the opportunity, and we're all running in the same space, right? In a very large market. So we use what we call the 3Ds, so data, digital, and design, as sort of the triangle, and you've got to get all points of the triangle working together. So we collect customers' data, we process it real time. Our algorithm captures the income and expenses. We classify those into discretionary, non-discretionary, the responsible lending codes. We get the property valuations. We've got a tiered hierarchy of backup suppliers. So we use a microservices stack to pull that information together, and our decisioning happens in minutes, you know, not months or weeks. You know, similar proposition. I think everyone that has got here in the digital mortgage space. The really interesting observation, just to kick things forward, that I'd make is, you know, one of the great impacts that Tesla had on the automobile industry was not necessarily that they built great cars, but they actually forced the industry itself to get its act together. And I think, Anthony, it's picking up on your point, right, which is we all believe that the future of mortgages is digital mortgages. We at Nano believe that where the data exists, the data should tell the story. The customer shouldn't need to. And the process, you know, the 50-year-old mortgage process where you pull a whole lot of documents together and then you hand it to a bank who then, in effect, exam scores you. to see how well you did. We just think that that process is completely the wrong way around, and that's what we're all here to do, is reverse that process. Let the digital smarts and the data tell the story, like a customer does, or how a customer interacts with pretty much any other product or service that they have out there.
Okay. And on that, Andrew, about data and the technology telling the story, providing the proposition, what about in terms of pricing? How are businesses like yourself positioned in the market? Is it beyond just being a price-led lender? Is it more than, you know, just that price point, particularly given that it is such a competitive market at the moment?
I think price is important, obviously, but I think there are other things like, you know, we sell ourselves on a faster time to yes or no. We don't want to waste your time. It's a bit more convenient for a customer with no paperwork, customer service, even our app that they get at the end when they've settled. All of that is really important, just to show a customer how we're different, I guess, to the other lenders.
Okay, all right. And Andrew, being a former banker from a big bank, what's your perspective on that?
Look, if price is the only lever that you're pulling, you end up in a race to the bottom. And I don't think anyone sees that as being a competitive position that you can hold for too long. So we believe at Nano, we're all about complete price transparency, having a great rate. Maybe it is sometimes the best rate, but sometimes it won't be. No one in banking, from my memory of being in it for way too long, has ever held the position of being the cheapest provider of any product for any sustained period of time. By the way, that hasn't gone out of business. But it's offering a great rate, great customer service, and we believe full price transparency, and then product simplicity, which is how you get transparency. And we believe that that's actually what customers want. One of the ills of the industry is over many, many years is products have been manufactured in big banks from the COBOL-based systems through the product teams out to the customer. That's the way that it works. You're constrained by your systems of record. Your product teams work within those parameters, and they build products to fit the systems. Pretty much everyone here, I imagine, who's got a digital mortgage, we actually start the development life cycle the exact opposite way. We start with, what does the customer want? How do they want to interact with you? What does the product look like? And then, because you're starting with a fresh sheet of paper, the system, you design the architecture to fit the customer experience. And that allows you to do things that simply the larger companies just simply can't do with their system constraints.
I just wanted to now move into the area of retention and acquisition strategies, which is a big focus, obviously, in the mortgage area. And Anthony, I just wanted to bring you in here. You'd mentioned that $1.5 billion healthy
portfolio. Yep.
Yeah. I just wanted to get a sense of the focus there. Was that purely on retention or around acquisition, should I say? And
yeah, no, that's so that's how it's. So everyone loves to talk in the digital space about customer activity levels. The actual critical aspect of, you know, how many and what scale is your actual customer settled customer base. For TicToc, you know, we're basically, if you take what we've settled and what we will settle based on what we've already approved, it's about $1.5 billion, allowing for the approval to settlement ratio that we typically see. The nature of our proposition is, you know, as Andrew said, it's about, and it's very much similar in this respect. It was designed with the customer in mind. You're being assessed in real time. There's no asterisks on our website. The pricing is competitive because our cost base is so low. Basically, our strategy is to consistently lead that and live that proposition through and have that evidence through things like our Trustpilot score, which the customers can go through all the reviews and sort of get a feel for, you know, are we walking the talk? And then to utilize digital marketing channels to create that awareness beyond that. We don't actually spend large amounts of money on above the line marketing. Ours is predominantly through digital interaction and activity, you know, educational content, simplicity of proposition, and you know, we've lived that consistently for 3 years. And what we see is our market share in the digital space consistently grow by, you know, sticking to those basic principles. Yeah, so that's really where we sit in it. I agree with Andrew. I don't think funding's a competitive or sustainable advantage. I think customer experience and automation, which drives cost out, are.
Yep.
And that's actually, if you look at all of us, I suspect that's where we're focusing, and then we're giving that lower cost outcome back to the customer through highly competitive rates. That's effectively what we're doing.
Yes, yes. And what about the wonderful world of cashback offers? RFI research seems to suggest that that appeals to people, but I'm not sure whether that's sustainable. You get a good offer here and then get another offer there and you're off to another.
I see, if I may, cashback offers, in my opinion, are there to help organisations that don't have the customer experience proposition that new entrants have, or the cost out benefit from a rate perspective that I just articulated. It's a competitive response to that. Unfortunately, the legislation doesn't, and the education around actually what the deal really is, doesn't allow the customer today to make a genuine apples for apples assessment in terms of what they're paying over life. You know, and that's the reality of that type of proposition. One of the challenges for anyone but a larger bank with cashbacks is effectively they are in many ways a business proposition that is, or a customer proposition to be precise, that is only available to those that don't need to value the cash flow cycle of the home loan. And actually, we all incur origination costs up front. In reality, ours are much lower because of our automation. But in reality, unless you are operating off deposits, which you're just able to raise at your discretion, the cash flows to pay cashbacks and compete in that space would otherwise need to be allowed for, and aren't really viable for the true disruptive non-bank lending cohort, because they make your origination cost and the front ending of your cash outflows much higher than is really sustainable. So really, you know, that's how I'd answer that question.
We'd go, just to jump in on that one, we have probably a similar view sort of mathematically, but from a customer perspective, my view at Nano is that we think it's quite disingenuous. The baubles, the marketing baubles that you are offering customers to, in effect, bribe them to come across to your proposition, we think certainly doesn't fit with the philosophy of our business, which is about transparent pricing, no fee, and letting people understand where they are, what their financial position is, and representing that in a way that allows them to take charge of their financial affairs. We generally and variously call financial wellness, if you like. And you know, putting a $3 or $4, whatever the number is, $1,000 bribe up front, it just clouds the waters and doesn't allow people to make economically rational decisions in our view.
So I was just going to jump in on the cashback thing as well. I think the last 12 months has been the most competitive for cashback offers that we've ever seen, with bigger banks offering the $3,000 and $4,000, which is harder for the smaller players to compete. Obviously, in the broker channel, that is something we're competing with. But what we're also finding is it's not only the cashback up front, but when you do get them approved and you send out the loan offer document, when the discharge form hits the outgoing lender, then there's also lenders out there paying customers $2,000 to stay, which we're also competing at that end, trying to retain that customer that we've just approved. So I've never seen it like this. I've been in mortgages for on and off for over 20 years, but you know, in the broker world, it is definitely hard, and we do focus on our experience, our turnaround times, our app, and our different proposition. And I totally agree with everything you've said, that the customer experience end to end has to win overall.
All right. Liz, well, I think you answered my next question around broker innovations and partnerships. Obviously, 86400 is a broker-led, and you've also secured a number of partnerships with some really large mortgage aggregators. And again, is that all about that end-to-end experience?
Yeah, definitely. I mean, you know, in the last 5 months, we've got, you know, AFG, Connective and Mortgage Choice all on board. So that was crucial for us to grow. But, you know, being new, being different, getting brokers on board did take longer, and getting aggregators on board than we expected. But we found that, you know, with our marketing strategy, particularly in our PR strategy, has really helped us get brokers on board. They've had the fear of missing out. So the aggregators, you know, were keen to join because they had so many brokers asking about us.
And Andrew, is brokers part of the Nano strategy?
Look, the short answer is no, and the long answer is sort of. The short answer is that's not why we set our business up. You know, we think about the role that brokers play overall in an industry, and if you think about the role that brokers play in an industry, they are the manual intervention over the top of a broken technology stack and an outdated product offering. Now, they do a really good job, don't get me wrong, but that's their role in an industry. And we came into this thinking, well, if the information's there, the process is better, the decisioning is real time, and the technology is good, then you don't need to manually intervene over the top. And if the pricing is transparent, then you don't need someone to go and work your way through the misinformation around pricing structures in an industry. So that's sort of the core of our business. Now, certainly one of the things we are looking at is how we interact with brokers who are adding value to the customer, because there will always be a subset of loans, mortgages, that require more information, that require more work. And that's where I think the broking industry will continue to add enormous value. Yeah. But I think our overall point of view on that, Christine, is where there is a simple lend and a good quality credit customer and pricing is transparent, it's hard to see where the significant value add remains for the fees that are charged by the broker. And so just like financial planning, the industry, I think, will almost invariably head up the value chain to the more complex end of the market, and digital mortgages will start to encroach further and further on that simple, straight-through part of the market.
And I think you hit the nail on the head there with the simple lend. Like the direct option is perfect for a simple lend. It's obviously when it's a lot more complicated that the services of a broker to actually work out who has the credit policy, et cetera, that fits your need is where the broker plays a crucial role.
That's exactly right.
And on Andrew and Melissa's perspectives, Anthony, how do you see that playing out for the then?
Yeah, sure. I see it playing out that the digital channel will grow both for direct and various broker models, and that so in an aggregate market share through digital, that 6%. Well, we know it grew 33% last year. So by definition, if it's growing that fast, it's capturing market share. But there will be, within that digital ecosystem, a role for direct and a role for broker based on circumstance and customer preference for advice versus self-serve. As the really smart propositions, like I'd argue ours is, I suspect Nano's will be, there are some others, evolve, the percentage of customers that are prepared to self-serve will actually increase because of that proposition. But I don't think brokers are gone tomorrow. And, you know, we're actively engaging with them through our technology. So we have brokers using our Validate product, for example, to improve their customer experiences as well. So, you know, I think it's an evolution. It's not a revolution. I think I actually think the elephant in the room that we haven't discussed is what happens with the bank branch networks, because effectively they are the preceder to the direct digital proposition, which is product based. They're not providing advice based on which lender's right for you based on your circumstance. They're providing, here's my product for you, which you can easily self-serve through a proposition like a TicToc proposition. And so I think, in all honesty, we'll see market share of digital grow, brokers to evolve, but in aggregate still be very meaningful. I think it's those bank direct channels that will actually contract through that industry structure change. And I also think we'll see some very, very disruptive models that are very different again from purely the product-based solutions we've discussed today.
Okay, well, that's an interesting point about the elephant in the room. I think a lot of the large lenders are definitely looking at their branch networks going ahead. And it sort of complements my next question around, obviously the big thing last year was COVID, and that really did reshape the way people did engage with their banks, and obviously having your digital lending propositions. I just want to get your perspective, and I suppose Anthony, I could continue with you.
Yeah, sure.
How did you see that resonate with borrowers? Yeah. Like, was that all?
Yeah, so as I mentioned, you know, we grew through COVID. This is settled dollar value, 128% year on year in the calendar year. And we know, as I keep mentioning, the digital channel grew 30%, 33% to be precise. Now, what's really interesting in that, when we started COVID, 80% of our customer flow was owner-occupy refinance. Basically, that was our market. By the time we finished the year and we go to December, our volumes grew, you know, exponentially by the definition of what I just said. And actually the last quarter in terms of application flow was extraordinary. And I haven't published those stats, but they're very big numbers. And so, but what was the change? It was that owner-occupied market stayed with us, but then we saw our purchase volumes grow to 50% of our flow. And then we've seen, of that purchase flow, 35% is first home buyers. So in that period, 70% of our customers, based on last year's numbers, are between the age of 21 and 40%. So we're capturing younger customers across the spectrum of home loan demand, not just sophisticated refinances like we did in 17 and 18 and 19 at increasing volume. We've actually seen this fundamental jump, which is just, our scale has just gone up significantly, because that it's almost like that slowly fast transition point has arrived in terms of, and I don't know what Melissa thinks, because you would see this, Melissa, through, you have pretty decent flows these days as well. So you may have a view on that, but yeah, that's the fundamental change here. And it's so exciting for us because they're the customers when they're purchasing. It's, the cashback is not a defense mechanism against them, so to speak. It's more alternate, but, we can provide the customer with full approval subject to a purchase contract in as fast a time as we can refinance them, right? So you're putting the power back in the purchaser, you're changing the proposition, and it's just as a result of that, a really exciting time
we
for digital.
A 50-50 split at the moment in purchases and refinances, and obviously purchases, the added benefit we have is we can turn it around quicker than a lot of other lenders can. So people, that's the most thing people get anxious with purchasing is, will I get my decision in time? So things like cashback and rate aren't as important as I want to get that house.
And what about you, Andrew? Do you think Nano's positioned now for a newly digitally engaged nation following COVID?
Yeah, thank you for the lay down here question. Look, it's when we set this business up, there's an old saying which is, I'd rather be lucky than smart, and setting up a digital home lending operation. Raising our Series A at the start of COVID was about as much fun as it sounds, and but actually building during COVID was a godsend for us. When you put 7 billion plus people in timeout and tell them that they've got to live their lives through their mobile phones or their computers, there's no great surprise that we've seen 5 to 10 years worth of digital uptake and adoption over 5 to 10 months. And so for everyone here watching this panel and all the panelists, it's nothing but exceptional news for all of our business models. And that's the positive spin on it. There's a sort of an exacerbant as well, which is, and it's a warning shot, I guess, across the bow of people who aren't in this business, which is be mindful that customers are now completely and utterly irrational and impatient with propositions that aren't real time. Aren't designed around their lifestyles and don't fit with what they want to do. It's just, people just don't accept interacting with companies where they're running broken processes because they've spent the last 7 months of their lives selectively interacting with companies that give them real decisions, real time, good products, good customer experiences. So it should be a real warning to those that don't have those business models.
And it will come an expectation that people expect that, and if you don't have those digital processes, then you won't even make the shortlist.
That's it.
And now my next question's around awareness, and I thought, Andrew, I might begin with you, given that you're poised to really enter the market, just want to get a sense of how you're going to be boosting your branding in the market.
Yeah, look, we'll be shortly launching our waitlist campaign. So we'll be, look, similar to Anthony, we won't have a lot of above the line advertising. It's just not our model. So we'll be a predominantly digital marketing organisation. Our technology stack allows us to create hyper efficiency in our digital marketing because we look at lookalike audiences and our targeting and curating activity from the top of the marketing stack all the way to the bottom of the credit stack, which is something that digital mortgage companies can do and others can't do. And what that allows you to do is it allows you to stop this crazy divisional split that you see in large companies where the marketing team see their job finishing at the start of the application process and the product team and the credit team start their job there, which is insanity, right? If you're one company and you're in a digital mortgage space, you want to target the right customers that are in your segment because it costs money to acquire those customers. And then if they don't get through your application process, then you want to know why. Because you want to go and then look at customers and audiences that don't have those characteristics. So, that's what we've built. That's what we will do. But look, from a proposition perspective, I guess the last point, we're all about fairness, openness, and transparency. So, there aren't bribes, incentives, baubles to move. here's our proposition. It's transparent. The pricing is transparent. There are no fees. The servicing is excellent. The app that comes with the digital mortgage that allows you to save, borrow, and spend inside of your mortgage with Apple Pay, Google Pay, a Visa card attached to the mortgage product itself. That's the proposition. It's a genuine full bank replacement offer.
Okay. And what about you, Anthony? Will you be, I know you'd mentioned you're not going to be doing big above the line marketing, but any nifty social media strategies or anything?
Oh, well, I think, well, a digital marketing strategy encapsulates every aspect of digital. So, you know, that incorporates, of course, social media as one mechanism of that. What Andrew said about, it's about a completely end-to-end technology and operational structure to support your specific channel is exactly right. And that's how we've operated for 3 years. So basically we were earlier on, we were a very early pure digital home loan proposition. So we've had to operate at a slightly more bleeding edge, but it also means we now have a scale business, you know, that generates pretty reasonable revenues off our asset base and our technology sales. So, but it's all about that engagement, retargeting, education, transparency. You know, we've never had on our website an asterisk, never, and still don't, not one. If you can find it, please tell me. So it is possible. It is possible. And if you live that and you execute, you know, well on that digital and operational interaction, you know, it's a growing market, right? So you should by definition grow in that, and you know, and you've got to make the really disciplined decisions. You know, at times we actually slow the top of our funnel to ensure we can live our proposition.
Okay.
You know, and I'm talking about at a scale where, you know, we're processing $500 million of home loan submits a month now. So, you know, that's really disciplined around that. And so very much, you know, I see it as it's holistic, it's end to end, and it's the future, because the customers will choose and are searching for those propositions. You know, Google's done a lot of research on this. The sad thing is low interest rates are ranked 1, and on a relative importance are 100 out of 100. Low fees are 2 at 76 in terms of relative importance out of 100. But the reality is there's 10 low interest rate, low fee propositions in the market today. It's actually how well you do what Andrew articulated, and I hopefully have supported, that actually defines whether you have, you know, your 1% of digital market or 5% of digital market or more.
And Anthony, you've just painted a very competitive environment here, which basically dovetails to my last question, which going forward, in terms of how this ecosystem is going to play out, do you think it's going to be one of partnerships? I know that Marty Baker from Bendigo has raved a lot about her partnership.
I'll talk about our partnership with Bendigo. It's a fantastic partnership. The reality is, because we are a proper tech company, the most disciplined way to build tech that is scalable or saleable to an industry is actually to have it fund loans that sit on a regulated balance sheet. So, you know, we built the brand, we built the tech. Bendigo gave us all their policies and enabled us to automate their policies, and our technology can, so long as the system fully approves the customer, put that customer on Bendigo and Adelaide Bank's balance sheet without any human intervention. That's a regulated bank. So we set out to do that, what we've done with Bendigo is partner for the funding so that we don't have to invest lots of our capital into the actual funding structures that we need to support our business. If you look at the accounts of all the non-bank lenders, including the new digital players, they have lots and lots of capital sitting in funding structures. We would rather invest that capital in the technology and the automation, and Bendigo share that vision. And so that really has been probably the primary differential with our proposition versus, you know, many of the digital players that are looking to be a disruptor to the banking industry. We've said we'll partner with the banking industry, we'll provide the customer proposition and the technology, and then we'll also, but to have access to that balance sheet flow, we also need the right to be able to partner with other organisations and share that technology on both the platform as a service and a SaaS product perspective, and we're doing that, you know, as part of our strategy.
I guess my question to you is, you know, do you think that that will typify the sector? And having said that, I'd love to get an insight on how you're seeing the 86-400 NAB partnership and marriage pan out.
Oh, look, partnerships as far as broker channel is crucial to our strategy and always will be our #1 channel. And obviously we will be bringing that to the partnership with UBank. So I think that's a positive. And for us, that means that we can with our technology and our customer-centric solution and our digital home loan, we can reach more and more customers, which I think is great for us, because our vision is to help Australians take control of their money, and we'll be able to, I guess, reach more Australians with that partnership. So I think I mentioned before that, you know, broker channel is still crucial. You know, finding the right loan is not just about rate. It's all about service and turnaround times and credit policy and after settlement experience and all those things, which is very hard for a customer to understand and to review on their own. Totally agree that direct is an emerging channel and is going to grow and get much bigger. But I think for those more complicated deals, the broker will always be king.
Great. And then finally, Andrew, to you, I mean, Anthony's comments around funding and the challenges there. How do you see Nano now going forward as a standalone offering, and how courageous are you with that?
Yeah, so look, it's if we bring back in the question of partnerships as well, because it's really the same question asked a different way. But this market's a co-opetition market, and if you think about what a digital mortgage is, you know, we're disrupting and changing the nature of customer experience at the front end of the distribution point of the market. Anthony's comments before around the branch network are spot on. You know, that's the biggest impacted channel here. The funding, our funding comes from wholesale providers and money markets. So it's a very well-worn, well-understood path to market, and all non-bank lenders have got it. Digital lenders have got the same approach. So you're by construction competing at one level, and you're in partnership at another level from a funding perspective. You know, the bigger question is, what does that mean in terms of conflict in the market overall? And the answer to that is there frankly isn't any. You manufacture money, you package money, and you distribute money. You know, banking's a pretty simple business. And the manufacturing part of the industry it has been manufacturing wholesale money for 50 years plus, and will continue to do so. And distribution has run different strategies over different periods of time. That will continue. That's part of our business, and it's core to everyone's business here.
Okay, great. Well, obviously, innovation will continue in the market, and it's just wonderful that it's been led by businesses like yourselves. So thank you all for your insights. Thank you, Andrew. Thank you, Anthony. And thank you, Melissa. Much appreciated.
Thank you, Christine.
And all the 2021.
Likewise.
Thank you.
See ya.
See you later.
Thank you.